Welcome to Your Stocks on CNBC TV 18. It's a ladies special episode as well, so we'll be taking all your stock queries, but the markets really are calling for attention in today's session. So just in the last 1 hour, we've come off our highs. The Nifty is down nearly around 40 points odd, and some of these stocks have really fallen off the cliff. Name a few: Ranback, Cesar, Goa, all of them really getting clobbered in trade today. JP Associate just pulling an intraday chart. They're just dipping lower, and it was getting worse. So the Bank Nifty really is what has given up its gains. Opened with a gain of nearly around 6%, and from the top it's corrected nearly 4% odd. So clearly now it's even 5% is what it's corrected from the top. So ICICI Bank would come up for you, as well as SBI, the biggest private sector bank and the biggest public sector bank. Both of them have given up gains since the morning session. In fact, moving into the red, and we did expect a big bounce, but seems to have been short-lived because the kind of pressure we are seeing on the markets is really worrisome. Sumaira, not a great time.
Not a great time, Nigel, and you know what, a lot of people are not really surprised. I'm not surprised because a lot of people have been saying that any sort of a rally that we see in the markets, we'll be using that opportunity to sell. So I guess this was, coming, and it should have been expected. But, the one day that the banking stocks thought might see some relief, they've had to end the day also.
It's given up all its gains.
Yeah.
We were talking about the big gains today, 6-7%. We opened up the gains, and we're just, everything that all the measures seem to be coming back like a boomerang. Whatever starts off well, and then it just comes back to hit us. Even the rupee is moving towards that 64 mark.
None of the fundamental problems are actually being solved by I guess the measures would work in the short term, but in the long term it's the fundamentals that are the key. And the rupee testing 64 again, just a short while back. There are a lot of points that continue to remain problem areas. But let's get talking about the stocks and personal finance queries we'll be answering today. Joining us on the show today to answer all your stock queries, we have Mayuresh Joshi, and to advise on all the personal finance matters, we have with us Roongta in our studios. Good afternoon, gentlemen. Thanks so much for joining in. First up, let's talk about stocks because markets really do warrant attention at this point in time. KN India is down about 3.5%. And Lata Solanki, who has an investment, calls in from Baroda. Hi, Lata.
Hello, ma'am. Good afternoon.
Good afternoon. What do you want to know?
Ma'am, I have KN India 100 shares at the rate 359. So my question is, shall I hold it for long term?
Mayuresh, what's your take on KN India? Because, she's losing a bit, but not so much yet.
Afternoon, Sumera. Yes, I think she's losing a little bit on KN India, but again, I think if you look at the Q1 numbers that KN India has posted, I think the top line obviously came around 8.5% down, somewhere close to that 4,062 crore mark. I think the barrels of production was almost at around 2,12,000 odd units. There was a forex gain into the component of almost 682 crores, but on an adjusted basis, I think if you leave that aside, I think the net profits fell by around 17.5% to close to that 2,445 mark. Having said that, I think KN is spending around $3 billion on capex to drill around 450 additional wells. It is planning to up its production in the Bhagyam field by almost double the quantum. So from 20 KOPD basis, I think it's almost going to do around 40-45 in the next 6 to 9 months or over the next 12 months. So in that sense itself, I think the capex plans are on track. I think decent balance sheet, I think cash on books, and though the profit sharing with the government is a little bit higher, I think with the gas production increases and with the increase in crude production, I think that augurs well for the stock. So in that sense itself, I think the investors should hold on to the stock. I think keep a view of around a couple of years. I think the stock should yield returns. We have a positive call on the stock. Our target price itself is around 356 rupees over a year's period.
Okay, I hope Lata that does answer your query, because that stock was one of the best stocks as of yesterday's close, because it did close very strong technically, and it was expected to bounce today. But looking at our markets, I don't know what's really going to bounce in today's session. But shifting focus to our next caller, we do have Rashmi Sharma, and she calls in from Mumbai. Hi Rashmi, what's your query?
Yeah, hi. My query is whether we should still invest in gold, given the gold prices are doing a lot of up and down. So whether gold is still a good investment.
Okay, Harsh. So I'll put that question across to you. What do you think? As always, gold seems to be the favorite among all our females.
Absolutely, and I think Just like any other asset, I think gold should be like any other asset, Rashmi. I don't think you should allocate a certain percentage. I would put a 5 to 10 absolute max. If you have more appetite for it, you can look at even 15% of your portfolio. But I think the more important part is how you invest. And I think you should not time it, Rashmi. Clearly, I don't think a lay investor should worry whether today it is 31,000, it was 26,000, it may drop again, it may go up. I think the best way for a lay investor to invest is like equities. Please invest systematically, month at a time, so that you just keep on investing irrespective of the time and take it up to the portfolio percentage that you have targeted. As I said, 5 or 10%. And the best way to do a systematic investment is to do through the gold fund route. The ETF is a little bit clumsy in terms of doing a systematic investment, so I would recommend a gold fund. Some gold funds are not taking in fresh subscriptions now because of the difficulty in getting gold. I think among the gold funds that are still actively taking subscriptions, you have SBI Gold Fund. That's something that you could look at. The answer to your question, Rashmi, is it should be a portion of your asset, and please invest systematically. Don't take a one-time exposure on any asset class, including gold.
But Harsh, I have a quick question that you said ETFs are a little bit clumsy, but does that make up for them being cheaper than gold funds?
Oh yes, they are definitely cheaper because a gold fund in turn invests into an ETF. So there is two costs that you pay. But again, if your investment is not very large, the convenience of a gold fund trumps the higher cost that you have to pay.
Okay, but that the most important part, I think, what Harsh really said in that entire conversation, or one of the key takeaways is don't increase the 10% of your total portfolio, because I don't think my mom, my sister really agree with that one, and I'm sure most of the ladies don't agree on that one. But I think we can slip into a short break, and we'll see you on the other side. We'll get you all your stock queries answered as well as your personal finance problems, so stay tuned.
Hi, welcome back. Still sulking near the lows for the market, so down about 34 odd points in the Nifty, closer to levels of 53.70 now, and things not doing well. So Reliance is now down about 2.5 odd %. ITC is down 3 odd %, and you know, the whole day we've been talking about how the banking stocks were expected to rally today, but look at the way those big ones have come off. Bank of Baroda down 10% off of its highs. Kotak Mahindra 8.5% off of its highs, nearly 7-8% gone on Axis, PNB, etc. So things not looking good. Even a biggie like SBI is about 7.5% off of the high point of trade. So things really not looking good in the banking space. And the Bank Nifty, which was up nearly 5 odd % in the morning, has really
cooled down. Yeah, it's corrected nearly 5% from the top. And Sumera, you make a valid point with regard to ITC, because that one's going towards 305, and it holds more than 10% weightage in the Nifty. And look at that slide. That's really when the markets have slid. So you just pull up an ITC chart, and if you pull up a Nifty chart as well, they're both sliding at the same time. So really ITC has really contributed to that downslide. Clearly it's a clear correlation on that front. But let's move to our next caller. We do have Pinky Mitra, and she does call in from Siliguri. Hi Pinky, what's your query?
Hi. Hello.
Yeah Pinky, go ahead.
हाँ, एक्चुअली मेरा MMTC खरीदा हुआ है, 15 शेयर खरीदा है मैंने, 46,000 करके खरीदा था. अभी उसका एवरेज वैल्यू है 23,300. ओके
ओके.
हाँ, क्या उसे अभी करंट रेट हमने खरीदा था 46,000 करके, अभी करंट रेट चल रहा है 49.80 रुपीज करके. तो क्या उसे मैं बेच दूं या फिर अभी रखना चाहिए? क्या करना चाहिए मुझे?
Okay, Mayuresh, I'll just put that question across to you. She seems to have purchased at around that 40,000 plus levels. I think at an average price right now, if you just pull it down, maybe the purchase should have been done nearly around 5 to 6 years back odd. And at an average price of 2,300, she's holding 300 shares. What's the take on that one?
Afternoon, Nigel. I think MMTC has just completed, I think the government has just completed a 9.33 divestment when the floor price was set at 60. If you look at the core business dynamics, I think the iron ore exports is something which is looking a little bit on the shakier side in the coming few months because of the ban in Karnataka. I think the Odisha permits still taking a long amount of time, the increase in railway freights, the increase in duties on export of iron ore prices as well, and the fall in international iron ore prices as well. So combination of all these factors has basically resulted in the underperformance on the stocks, and that is clearly getting reflected onto the stock price. Having said that, I think one must also realize that MMTC also trades into gold, and the kind of increase in gold prices and the import duty on gold, I think that would also have some amount of bearing onto the top line of the company. So I think MMTC would struggle to I think continue meeting its top line growth because of the iron ore exports. I think the steel industry itself is abetting for increase in the duties or having the duty status quo. So in that sense, I think the stock might underperform going forward as well. I think even at these levels, I think from a valuation perspective, I think it is still trading at around 100 times forward earnings. So in that sense, I think though the investor is incurring losses onto this stock, I think the advisable portion would be to exit the stock on rallies and possibly have some amount of entry points into selective sectors like an IT and a pharma on declines, which is also seeing some amount of profit booking because of the higher valuation that we've seen. So I think one should exit this stock on rallies and possibly look at certain stocks within the IT or the pharma space.
Pinky, that's the advice for you. Perhaps look at IT or pharma, and viewers don't get worried about with the acquisition price, because I guess this was before they had announced that 10:1 bonus. I suppose that she had bought it at 2,300 plus levels. But Pinky, perhaps you could consider IT or pharma. But it's worrying now because even some of these defensives are giving way. But let's get another caller in. Anu Mehta has sent us an SMS query from Mumbai. She says that she can invest 3,000 rupees per month and wants to know the asset allocation. Harsh, I think first of all, we can begin by congratulating her, because at 22 and being a student, she's already begun to plan her finances.
So it's amazing. I think this is the media and programs like this that is spreading this message. At 22, a student, she's talking about systematically investing. More importantly, she's talking about asset allocation, because actually asset allocation is 70-80% of your financial planning. The only issue at so the great thing is that she's thinking about this and planning to do it the right way. So asset allocation to be done will have two components. So one is what is a risk profile. Now that really is very difficult to do on a television program. Second is how far out are her goals, so even with the same risk profile for longer term goals, you can take a little more risk. Third, in the case, because she is still a student, are the chances that whatever systematic investments that she is doing, she may have to stop if she goes for higher studies or something like that. So there are these three uncertainties around it. If you take some assumptions, and fourth is, of course, you should plan your goal. What should be the quantum of your goal? And typically at her age, she may find that she is not able to meet those goals. It does not matter, but at least she is aware, I think. So those are the four things that she should look at. Assuming that she wants to invest systematically without a break for the long term and has a reasonably aggressive risk profile, at this age she can invest aggressively in a large cap equity, a very substantial portion, which can be 70, 80, even 90% in a large cap equity fund and 10% in, say, a PPF.
So, are there any recommendations on what's a good, well-performing equity fund right now?
So, for a large cap fund, you could look at an Franklin India blue chip or an ICICI focused blue chip fund. The other option, if the risk profile is a little low, is a balanced fund. So that has certain advantages as well.
Okay, Anu, I hope you got all those queries answered to look for a balance fund or the specific funds that Harsh had mentioned out to you. So all the best with your investments. But moving back to some of these stock queries, Mahua Bose does call in from Patna, and she holds shares of Tata Steel, which has been on a run in this month itself. Hi, Mahua, can you hear us?
Hello.
Yes, Mahua, go ahead with your query.
Good afternoon, sir. I have 100 share of Tata Steel at a price 308. I bought it before 3 months. I can hold it 1 year. Should I hold or exit?
Okay, Mayuresh, I'll put that question across to you. What do you think? She's got it at around that 300 price level, but she can hold it for the next 1 year. Will the cycle turn?
I think two things to look at it. I think on the operational performance, Tata Steel did post a good set of numbers. I think especially if you look at the European side of operations, the EBITDA to ton actually came in much higher than what market men were expecting. So at around 2473 rupees per ton against the 1947 on a sequential basis was much higher, and that basically propped up the EBITDA margin by almost 100 bips. Having said that, I think the reduction in the raw material prices like iron ore and coking coal, I think basically abated the margins in that respect. So though the top line actually declined a little bit, I think the operational efficiencies actually enabled the company to post better EBITDA margins and effectively I think a better bottom line number as well. But having said that, I think one should also look at the kind of demand supply dynamics. I think the Chinese data has been decent so far in the past few weeks, but again I think this should stabilize and continue. Overall, I think steel demand supply dynamics will still remain a little bit sticky over the next 3 to 4 quarters. On the domestic side, I think both on the auto side and the construction side, I think the steel demand is looking a little bit muted. And on the European side of operations, I think the major players like an ArcelorMittal or even something like an Eraxa, which is Russia's largest steel maker, is showing signs of weakness within the steel industry. So having said that, I think the realizations might actually just not pan out the way they have in Q1, and one really needs to take a call with a larger time perspective. So I think the investor should possibly look at the stock from a couple of years perspective, and from that view, I think if the demand supply dynamics return, I think the investor will get her stock price or her purchase price back.
And Mayuresh, just a quick question I want to ask you, because markets are once again picking up pace on the downside. So the Sensex has lost about 240 points. It's standing pat at that 18,000 level. The Nifty too is actually heading now once again towards levels of 5320. Is it just that people are booking profits at higher levels, or is there more to it?
I think, again, a couple of things to look at. I think one is the kind of macro data that we've seen. And obviously, the macro data has been known to market participants for quite some time now. I think the IIP data is deteriorating. I think the inflation numbers did come higher. So it was not a surprise in terms of macro dynamics, the kind of move that the markets were basically panning out. Having said that, I think the move was basically pinned on the defensive, something like an IT and a pharma, where I think the stock prices and the valuations had reached the higher band of the historical averages compared on a 2-year or a 5-year perspective. So in that sense, I think people are a little bit jittery. I think sentiments are turning a little bit low. And in that sense, I think wherever they're seeing money is being made, especially in the IT, pharma and the defensive pack, I think there is some amount of profit booking happening. So I think there is clear jitteriness in the market. I think our only thesis for the whole thing is that the RBI move yesterday would be a short-term play, and that might have some short-term respite for the banks, but the long-term structural problems still persist into the system. So the markets might stay in a very tight range, maybe 5,200 on the downside and possibly 5,800 on the higher end of the band.
Yeah, Mayuresh, as you speak, that rupee has gone to an all-time low, 62.17 currently is what it's reading at. And importantly, this is an all-time low, and a couple of stocks, just to pull them up, ITC, ICICI Bank as well as Reliance, all of them have really taken a sharp knock in the recent past, and that's why we're seeing the Nifty really get dragged lower. Look at that. Reliance has seen some bit of profit taking, and that's really what's putting pressure on the market. So just putting those three together, more than 25% of the weightage is contributed to these three stocks, and we are seeing pressure on them. Clearly no real place to hide if ITC is going to be selling off in that kind of fashion. Importantly, we will get some kind of opinion with regard to the rupee shortly, but as of now it's not a pretty picture. And just the Bank Nifty as well, to pull that one up, because it was supposed to see a relief rally today, but clearly it's seen a fair bit of profit booking, Sumera, since the time we opened up. Nearly, look at that, it's almost flattened out. It opened 6% up, and in early trade, traders were really stating that they couldn't really get the Bank Nifty at the first stake. So that was the kind of demand we did get, and that's the kind of buying we did see in the bank nifty, some of these PSU banks as well have seen a fair bit of pressure because they did open up with gains in excess of 6-7%, and from there PNB, SBI, all of them have seen a lot of pressure. So clearly profit booking across the screen, Reliance, ITC, all of them seeing so much of pressure, and that's why the Nifty has fallen more than 70%, 70 points as of now. Remember, it was trading up nearly around 2% odd in early trade. So clearly it's not a good looking screen, but as we speak, that rupee is really calling for attention, moving towards that 64.25 mark. And
My
remember,
God.
at one point of time, Sumera, it was really...
Look at the way it's accelerated its
Exactly,
fall actually, and despite all those RBI curbs which have been announced, it's really disheartening to see that almost nothing is taking effect right now. And at 64 quarter, in fact, there were people who've been calling for targets of 65, etc. on the rupee, but that looks now more like sooner rather than later. In fact, Lata Venkatesh also joins in with more on that. Lata, the way the rupee is exaggerating its fall right now, it's really unprecedented.
Not quite, Sumera. We should very clearly focus on the global situation now. The Indonesian rupiah, I think, is down about 1.8 or nearly 2%. There have been bouts of falls in all currencies. So this is a global dollar strength. Dollar is also strengthened against the majors, against, say, the euro, yen, but it's strengthened much more against Asian currencies. Dollar Asia, if anybody was monitoring it, has shot up sharply. And therefore, you have to read this as a global phenomenon. Perhaps the anticipation of the market is that there is going to be some announcement of tapering sooner rather than later, and people are moving in to take some kind of positions. And usually when it is a global tsunami, central bankers don't stand in the way because their money will count for nothing. It is like throwing sand on the wheel. It's not really going to help, and that's why you're not seeing intervention. Earlier in the morning you did see corporates coming in and offering dollars, but now after it crossed 63.50, 63.60, even they stopped offering. I understand that there is a lot of foreign bank buying, FIIs coming in and buying, so clearly they are moving out of their emerging market positions. May not be in great hordes, because even in low volumes this is bound to happen, since nobody is offering at the opposite side. People have to take what they get. So although FIIs would be moving at losses, they want to move. This is happening perhaps in thinner volumes than normal, but it's a global trend. You can't argue against this. And in any case, yesterday's measures were not to protect the rupee. They were to correct yield markets. If anything, they perhaps took away some of the steps that were protecting the rupee. There was really nothing standing. Once the global tsunami hits, it just hit.
That's true actually, because even the South African rand has lost about 1.25% now. The Indonesian rupiah that Lata was talking about, that has lost about 0.7 odd percent as well as we speak. So it's almost a global currency rout, Lata.
Yep. Yeah, no arguing against it. And it's not just currencies, I guess, Nigel, there is also collateral damage on equities.
Yeah, on equity. So a few of these stocks, Bharti Airtel just sold off, down close around 4% the last time I checked. Tata Steel, JSW Steel, they have a high amount of that dollar denominated debt, and we are seeing a sharp sell-off in these stocks as well. Clearly on the back of that rupee, now it's accelerating pace, moving to 64.40 odd, and as Lata did say, maybe it's coming on lower than expected volumes, and this is the same phenomenon that did happen a couple of trading sessions ago, and we did see it accelerate towards that mark. So Sumera, really not good times for the markets.
Yeah, and as the rupee heads towards that 64.5 mark, we're seeing the Nifty also now heading quickly towards that 5,300 mark. So about 1.5% gone on the Nifty. Reliance is now down about 4%. Likewise for ITC, both those heavyweights down 4%. ICICI Bank is down about 2% right now. So things really not looking good. But what we'll do is take a very quick break, come back in a bit. On the other side, there's lots more coming up, and Closing Bell will take you through the last hour of trade. Stay with us.
MCX Stock Exchange, India's new stock exchange, presents Your Stocks.